So in today's video, really going to go over the stock split dividend, just how it's distributed, really simple numbers, just my personal thoughts and opinions, not financial advice. Do your own research, perceive this in your own way, think what you want, comment what you think, honestly, but let's get right into it. So I put this infographic here because I'm a clown. I saved the Excel file as a PDF and didn't save it as an Excel file. I wanted it to be presented like this, but now I can't go back and edit it because those numbers underneath there were wrong. So I put this nice little infographic, but it's not that relevant to the video, so let's get into it. So basically, DRS Shares, most recent quarterly earnings, we had 12.7 million shares reported. But we know that number is probably higher at this point by the time the stock split dividend happened. So I'm just very, very lowballing that, honestly, 50.8 million shares. Then we have insiders at 46.4 million after the split. That's 97.2 million shares after the stock split dividend, right? That we know for sure are held by insiders and DRS holders. And why that matters is we're seeing the stock split dividend first paid to these two parties, right? DRS computer shareholders are direct registered shareholders, so directly registered in their name. So it goes straight to them. They're at the transfer agent. Their shares are already there with computer shares, so they just give them to them first. Then it goes to the insiders, right? So those are the two people that are getting their shares first, or two parties, I should say, or category of shareholders, I guess would be the right term. But that gives us 97.2 million. That's a third of the total shares outstanding. And why that's really important is if 1/3 of the shares outstanding are held by these two categories of people and they're getting their shares first, that doesn't leave a lot of shares left to be distributed. That's this 155 number over here. That's only 155 million shares left to distribute. And if you divide that number by 3, you get 51 million shares, right? And that's 51 million shares to go to institutions that might be long, that locates for the publicly available shorts, for some shares that are tied up in the option chain, all different things, shares that are in ETFs, and all the people that haven't DRS. Think about that. All the shares at brokerages for people who have shares that aren't DRS, right? I know I have some shares in my IRA. Those are the only shares I personally have not DRS'd. So when you accumulate all that, it's really hard to believe they only had 51 million shares accumulating to that amount across institutions, brokerage accounts, ETFs, everything. It's like, really? So how are these 155 million shares going to meet the obligations of all those other shares they're getting sent for, right? So like what I kind of mean by that is all these brokerages now just suddenly taking away the shares. It's like, okay, they were just given the book, like it was just coded like that, right? They improperly coded as a stock split, not a stock split dividend. So a stock split dividend is a distribution. It's a dividend, right? It's paid by the transfer agent. So I'm going to get into that here. Talking about the dividend, transfer agents generally act as an issuer's paying agent for dividends. And you jump down here. If it is a stock dividend rather than a cash dividend, the transfer agent will generally issue shares in book entry form and send statements to the shareholders. So that means people on here are getting it first. People who are held in computer share get it first. And you know when you call up Fidelity or some of these other brokers, they say, oh, no, your shares are not being lent out, there's no way. But guess what? I mean, they're not lying to you. They're not, but they're in the DTC. Their shares are locatable in the DTC and they're held for your benefit at your brokerage, not actually in your name. There's a difference. The depository trust company is a repository through which stocks are transferred electronically between brokers and agents and provides electronic record keeping and clearinghouse services. The DTC was established to reduce the volume of physical stock certificates transfers involved in the trading of securities. DTC holds eligible securities for financial institutions such as brokerage firms and banks, collectively referred to as participants. Participants then may request debits and corresponding credits to their DTC accounts and effective transfers. In this manner, DTC facilitates share transfers on behalf of shareholders via their brokers or transfer agents. Whew, that was a mouthful. But basically what that says is, may request debits and corresponding credits. That means they can loan them back and forth. Oh, there's a locate here. Oh, yeah, well, the shares in the DTC. That's how these brokers have been able to give out so many shares, because they're all just saying, oh, yeah, well, no, the shares are in the DTC. So yeah, it's on our book. We quoted it. Yeah, but it's over at the DTC because they're just requesting corresponding credits, and it's just being fulfilled by probably a debit of like some option or some ETF being opened up. Because did you know market makers have the ability that we regular people do not to buy an ETF and then go ahead, open it up, and actually take the individual stocks out of there and then choose to sell specific ones. Like it's crazy. Like when I learned all this, I was like, what the heck? And I'm still learning every single day, by the way. So this fast automated securities transfer system here kind of gets a little bit more into that, where it's like this CD & Co, right? I've talked about this before. It's the DTC's nominee to represent the transfer agent's book and sum of total shares that are issued by DTC participants. So this is who ComputerShare gives the shares to, and they're basically distributing the shares to all the brokers, and all the brokers are coming up like, shares please. Oh, can I have my cut of the shares? And they're like getting the shares now, and they're like, wait, what? This is all the shares you're giving me? I just showed you what's on my books. How are you only giving me this many shares? I personally think that's what's going on behind the scenes right now. And I think Dr. Susan Trimbath is kind of thinking the same here. I want to show you this tweet real quick if it wants to load up. It's coming along. Okay, so the question at whatever and others are asking is about operations. To process as a share dividend, central depositories need to receive shares from company. They did not. Hence, Backstage Operations, Grips/Gaffers Stories again, uses this as a quote-unquote stock split process. And if you read this here, it is process depository by changing number of shares 1 times 4, asking account what the difference means for an investor, taxes, cost basis, etc. The key difference between stock dividend and stock split is that while stock dividend allocates a number of shares free of charge based on this prevailing share ownership, stock split is a method where existing shares are divided into multiple units with the intention of expanding the number of shares. A lot of reading, guys. Honestly, these behind the screen videos are a lot tougher for me, but I'm trying to get better at them. So she's touching on it. She's talking about it. And I think that's why they're saying, oh, well, it's a stock split. We're told it's a stock split. They're just trying to buy time to like kind of come up with the shares maybe. I don't know. But then also think about like this iBorrowdesk chart here, right? And these other things are loading. I'll get them loaded up now. So here, right, this chart, first of all, this little gap here, you gotta love how they just stop updating it when things start getting chaotic. Let's just not update it for a few days. What's going on with the borrow fee? Like, totally normal. And then right after the stock split dividend, this weird, sudden, major spike, and then it just came right back down, like as if it never happened. And it's just been flatlining here. And it's weird since the most previous run up we had, right, back in March, or like when the share price went really, really low right before that little spike. The fee went right up, and then it kind of bounced out. See, it's like fee goes up, bounces out, fee goes up, bounces out, fee goes up, bounces out, like fee goes up. See, it's getting more and more like volatile, this borrow rate. So it's like another interesting thing going on. It's like, what are they doing behind the scenes? It's like, it seems like there's just so much commotion. And what I think is really interesting here, and this is just, I would love to know if anyone has more information on this. And by the way, let me know if you like these kind of videos, because I'm just kind of ranting off the top of my head here, just going through a bunch of different things. I hope it makes sense. I hope you guys like this. Let me know what you think in the comments. And if anybody knows anything about this, D.E. Shaw and Company, right? I'm going to look into them after this video, actually, after I'm done recording this. But look at this, 938% ownership increase since the last quarter. Like, I never even saw this like a while back. Like, it's interesting. They went up 2.6 million more shares. So they went from 300,000 shares up to 2.9 million shares. That's a massive, massive increase. And when I just looked them up, right, like I literally just Google searched them. I didn't even like read into it yet. And again, I'm gonna after this video. Maybe I'll make another future video on them. But when you scroll down here, where is it? What's so special about D.E. Shaw? D.E. Shaw is a group trusted by investors across the world to manage their assets by seeking the optimal balance of risk and reward. While we're known as a pioneer in quantitative investing, we also have considerable expertise in areas that involve fundamental analysis or portfolio manager discretion. And I think I saw somewhere else here that basically like what they do is they kind of like specialize in trading based upon like algorithms and like taking advantage of algorithms in the market, so to speak. And that's what this quantitative investing pioneer that they are claiming to be. That title comes from there. So it's interesting that a quantitative pioneer chose to increase their GME position 938%. Again, this was, like reported on the 31st, or as of March 31st. So I mean, that was a while back, but that means they got a pretty good entry. So what quantitativeness did they see that made them see that? Interesting thoughts here. Interesting things going on all around. Like, it's honestly hard to say because there's so much, and this is so like, just what is this? Like, what is going on? I'm just trying to make sense of it. So please let me know what you think. Thank you for watching.